Today we have to do the cash flow statements. Right. First of all, I will summarize this in the cash flow statement. So this is the summary on cash flow statements. We record all the cash and cash equivalent, receipt and payments. Right. So when we prepare financial statements, right? Components of financial statements, financial statement. So when we learn about components, there are 5 components. Right? So out of these 5, you have already studied profit and loss, the statement of profit and loss, statement of financial position, statement of changes in equity, and the notes. Right? Then there is one more component which we learn separately. That is the cash flow statement. Right? So there is a separate. This will be a separate question in your exam paper. Right? So what do we record in the cash flow statement? We record all the cash, receipt, and payments. All the cash, receipt, and payment. Similar to the cash book, but the formatting and the headings and all different. So in the cash flow statement, we record the cash flows in 3 different activities. We need to identify the cash flow in 3 different activities: operating activities, investing activities, and financing activities. Right? Operating, investing, and financing activities. So operating means our normal day-to-day operations, mainly the short-term, current liabilities and current assets. The transactions related to current asset, current liabilities. So what comes under current asset, current liabilities? The working capital, the stock, debtors, right? The creditors, expenses, prepayment, payables. So those are the operating activities. So anything related to this, we consider under operating activities. Then we have investing. Investing activities means mainly the non-current assets. Property, plant and equipment, intangible assets, investments, investing in a bank, investing in shares. Any dividend that you receive, any interest that you receive, will come under non-current asset and is called investing activities. Then the financing activities is the third one, which is related to equity and non-current liabilities. So we call it financing. Means how does a company obtain money? How does a company get finance, get money, either from the shareholders as the equity capital or as a loan, like debentures. Right? So 3 activities in a cash flow statement: operating, investing, and financing. When we prepare the cash flow statement in two methods, direct method and indirect method. And practically, we mainly use the indirect method. And if you take the published financial statement or an annual report, you will see the indirect method will be used. But for our knowledge and the exam purpose, we will do both the methods, direct method and indirect method. Right? So what you need to know is what is cash flow statement, what are the three activities, what are the preparation methods. Three things. Okay. Now the preparation. So when it comes to the preparation, there are two methods, direct method and indirect method. Direct method and indirect. So the difference between the direct and indirect method is only from the operating activities. Only from the operating activities. Right? So in the direct method, we have the cash receipt and payment directly. Right? So what are the receipts? Right? Receipts are main receipts are cash sales and receipt from debtors. There is a question. If they have not mentioned the method in the exam, we normally use indirect method. Right? So actually it depends on the information that they have given. Okay, most probably it will be indirect method. Okay, so cash sales and the receipt from debtors are the main cash receipts. These are plus cash receipt, and the payments, either cash purchases or payment to creditors, and operating expenses. These are the payments. Receipts will be plus, payment will be minus. Then we take the cash generated from operations. Cash generated from operations. To get the net cash flow from operating activities, we will take two more transactions. One is interest paid, other one is tax paid. Then the answer becomes net cash from operating activities. This is direct method. So in indirect method, what we do is we take the profit. From the profit, we convert the profit into cash. Profit is converted to cash. Profit is converted to cash. Right? So in the profit, there are non-cash items. Right? Mainly depreciation and disposal profit loss. Right? When you are calculating the profit, you have deducted the depreciation. So since it is a non-cash payment, it's not a cash payment. Right? Depreciation is not a cash payment, it's an event. Therefore, we add back the depreciation. Add back the depreciation. In the disposal, profit is also not a cash item. What you receive for disposal, the sales proceeds is the cash, not the profit. So that if it is a profit, we have to deduct. If it is a loss, we have to add back. Then there are other activities. Since we are preparing the cash flow statement for three activities, any other activities we have to adjust. Interest expense. Since you have to show separately the interest payment, you have to add back the interest expense. So interest expense will be added, interest paid will be deducted. Dividend income is recorded under other income. So that has to be shown separately. That will be deducted. Then you will get the answer. Operating profit before changes in working capital. Right. So here under adjustments, we didn't adjust credit sales, credit purchases. Those things we didn't adjust. Therefore, to adjust that, we make the working capital adjustment. Right. So we need to know the relationship between the working capital and the cash. Working capital means current asset and current liabilities. So simply you can remember current assets are having a negative relationship. Assets are having a negative relationship. Right? Liabilities are having a positive relationship. Liabilities are having a positive relationship. Right? For example, let's say the stock increase. Why does the stock increase? Stock increase means the cash decreases. That is why we call it negative relationship. Debtors decrease. Why does the debtors decrease? Because the cash increase. If the debtors are decreasing, cash will increase. Right? Then liabilities, there is creditors decrease. If the creditors decrease, the cash will also decrease. Right? So there is a positive relationship. Liability minus means cash minus. Right? Asset minus means cash minus, cash plus. Right? Okay. So all these other activities that will be recorded separately in other like finance activity and investing activities. Okay. So once you adjust the working capital, you will get the cash generated from operations. Cash generated from operations. Then we adjust for interest and tax payment, only the payment. Right? Only the cash paid. Then we get the answer net cash from operating activities. Okay. So this is the summary. Right? When we do the question, I will explain more about the cash flows. So we will learn direct and indirect method both. So when you are taking this relationship, what you need to understand is the accounting equation. Right? So if the asset increase, let's say or debtors decrease, then what happened to cash? Cash, what happens? Cash will increase, right? Let's say the stock increase, then what happened to cash? The stock increase means cash decrease. That is why we call it negative relationship. Let's say liability creditor minus. If the creditor decrease, what happened to cash? Cash will also decrease. Right? So based on this only, we derive this the relationship between working capital and cash. Right. If there is any question, you can ask. Now let's move on to a question. Right, let's do this question. I have shared this in the group also. Sharing this as well. So let's read the question. Set out below are the financial statements of Shabnam Company. You are the financial controller faced with the task implementing LK7 statement of cash flow. Shabnam Company statement of profit or loss is given. Profit or loss is given. Right? Assets, non-current assets, current assets, total assets, equity, non-current liability, current liability, total equity and liabilities. Right? So we have this. Then the additional information. The following information is available. The proceeds of the sale of non-current asset investment amounted to 30,000. So this is actually a disposal. They have sold the investment for 30,000. Fixtures and fittings with an original cost of 85,000 and a carrying amount of 45,000 were sold for 32,000 during the year. So this is a disposal of fixtures and fittings. The following information relates to property, plant and equipment. Cost, accumulated depreciation, carrying amount. 50,000 ordinary shares were issued during the year at 120 per share. Dividends totaling to 80,000 were paid during the year. Required, prepare the statement of cash flow using the format laid out in case. So I'll draw the format. So first let's draw the format. So I'm going to use the indirect method. Indirect method. Shabnam Company statement of cash flow for the year ended 31st December 2000. Cash flow from operation activities, cash flow from investing activities, and cash flow from financing activities. Three main headings. Starting with profit before tax, then there is the heading adjustments. Adjustments. And keep some space. Answer is operating profit before changes in working capital. And the changes in working capital. Keep some lines. keep some lines for interest paid and tax paid. Net cash flow from operating activities. Then the heading investing activities. Right. Give some space. Net cash flow from investing activities. The financing activities. Net cash flow from financing activities. These are the final answers. So these are the final answers. Then net increase or decrease. Cash and cash equivalent. Final net plus opening balance. Then the answer is closing balance. Can you do this for me? Right. So let's start. Once you do the format, you have to start with additional information.
We use direct method.
I didn't get it.
If they haven't given the topic beforehand, we should use the direct method or indirect method.
We can use both the method. We can find out the profit. Right? The profit is here. Profit is recorded in retained earnings. Right? So the difference in the retained earnings is the profit. There is a dividend. We need to see the dividend and we need to find out the profit before tax. Right? So anyway, we can use the indirect method. For this question, we are going to do the indirect method. And once I do the indirect method, I'll show how to do the same question in direct method as well. Okay. Right. So, let's start with additional information number 1. Proceeds of the sale of non-current assets, investment amounted to 30,000. So let's do one by one. First one. Proceeds of the sale of non-current asset, investment. So see, if you see the trial balance, there is investment, non-current asset, 25,000. There is an investment of 25,000. So 25,000 worth of investment sold at 30,000. 25,000 worth of investment sold at 30,000. So what is the profit? Profit on the disposal. What is the profit on disposal? Cost is 25. Yes. What is the profit? Very simple. 25,000 worth of investment sold at 30 means the profit on the investment is 5,000. Profit on disposal of investment is 5,000. Right? So what do you do here? We need to adjust. Now, if there is any profit from disposal, that should be deducted. Profit on disposal of investment. That has to be deducted because it is in the profit. since it's a non-cash item, we need to deduct the disposal profit from the profit before tax. And the cash receipt is a investing activity. Cash receipt is an investing activity. So that has to be recorded under investing activities. So two adjustments related to this. Proceeds from disposal, not proceeds from disposal of investment. The amount that we receive, we have to record under the cash flow from investing activity, and the profit has to be deducted from the profit before tax. So that's the record for the investment of disposal of investment. Is it clear? That's the first adjustment. Then the second adjustment is fixtures and fittings with an original cost of 85,000 and carrying amount of 45,000 were sold for 32,000 during the year. And there are other information related to PPE, cost, accumulated depreciation and carrying value 2001 and 2002. So next, I will explain one of the main adjustment in the cash flow statement. Right? So the main adjustment in the cash flow statement is this PPE depreciation and disposal part. This is the key, the main part, right? So if the examiner want to make the question complicated, he will touch on the PPE adjustment, right? So when you have the PPE adjustment, first draw the accounts. And so here I need 3 ledger accounts. Working number 2. I need a PPE account. PPE cost account, provision for depreciation account, and the disposal account. I need 3 ledger accounts. Right. I'll give you a few minutes. Can you all find out, can you all complete these accounts based on the information given? Based on the information given, can you all complete this? Opening balance is given. PPE open balance is cost is 595. 2001. 595. Then see the closing balance. Provision for depreciation opening balance is 290. Check for the closing balance. And there is a disposal. Do the disposal adjustment. And find out the disposal profit, depreciation for the year, and if there is any new purchases, that also you need to find. Okay. I'll give few minutes. Can you all complete this working and tell me what is the disposal profit? What is the depreciation for the year? And what is the purchase? Value of new purchase of PPE. New purchase of PPE. I need these three calculations. Carrying amount means that is the net book value. Carrying amount means cost minus accumulated depreciation. That's the book value. That is the amount we show in the statement of financial position. Carrying amount. From 595 minus 290 is 305. What is the disposal profit? What is the depreciation for the year? And what's the new purchase value of new purchase of PPE? So opening balance cost is 595. Closing balance is 720. Provision for depreciation or accumulated depreciation opening 290, closing 340. Then the disposal. Fixtures and fittings with the original cost of 85,000. When there is a disposal, there are 4 steps. First step, we transfer the cost right from the PP account to the disposal account. 85. Disposal account debit. Disposal account debit. PP account credit. That's transferring the cost. Then we need to transfer the depreciation. Number 2. Disposal. We transfer depreciation. Cost is 85,000. Carrying amount is 45. If the carrying amount is 45, depreciation is how much? 85 minus 45, which is 40. So number 2 is depreciation, accumulated depreciation. 40,000. Right, first transfer the cost, then transfer the depreciation, accumulated depreciation. Then the third step is the sales proceeds sold for. What is the selling price? 32. So this is the third step. Cash account debit and disposal account credit. Then you can find out the profit or loss on disposal. How much do you think? How much is the disposal profit or loss? And tell me how much is the depreciation for the year and what is the purchase. Okay, what is the answer? So difference in this account is loss. Which side is pro? 85 minus 72. Right, so this is a loss. Loss on disposal. The difference in the provision for depreciation account is the current year depreciation. The difference here in the PP account is the new purchases, additional purchases. Debit side, cash account credit, PP account debit. So balance new purchases 210, current year total depreciation 380 minus 290, which is 90,000. So this working is very, very important. Most important working in the cash flow statement. Any doubts? Any questions? Anything you want to clarify? Please tell me. Because this is the difficult part here. Everything else is easy. Right. So when you have the PPE, there are 4 amounts that goes to the cash flow statement. One is the disposal profit or loss. Disposal profit or loss, we need to adjust in the cash flow statement under operating activities adjustment. Number 2, depreciation for the year. Current year depreciation, that also non-cash items. These are non-cash items. So we need to adjust these non-cash items. Right? Then the third one, the financing, the investing activities. Proceeds from disposal. Disposal. Number 4, purchase of PPE. So mostly you will get these 4 transactions. Mostly you will get these 4 transactions in the PPE related transaction in the cash flow statement. Okay. Here we will adjust loss on disposal of PPE. It's actually a fixture and fittings. Fixtures. Those will be added. Those will be added. Loss on disposal of fixtures. And the depreciation also will be added, which is 90. Depreciation also will be added. So these are expenses, right? That is why we have added 13 and 9. Right. Then there are 2 more items. Proceeds from disposal of fixtures. Cash received. We have received 32,000. That's a plus. Then the purchase of PPE. It's a minus. Cash account credit. Purchase of PPE 210. Purchase of PPE 210. 4 adjustments related to PPE. Okay. So that's about the PPE adjustment. Next, so we cover this property plant. 50,000 ordinary shares were issued during the year at 120 per share. So here is the stated capital. Stated capital has increased by 60,000. So there is a share issue. $50,000 shares into 20 equals 60,000. So this is the share issue. So when we are issuing shares, we will get cash. It's an investing issue of shares. So the stated capital increase means we are getting cash. Stated capital increased by 60,000 means stated capital credit means cash account debit. We have received cash. Capital negative positive relationship. Cash and capital, cash and liabilities, there is a positive relation. Capital increase means cash increase. Then the dividend payment is given. Dividend 80,000 were paid during the year. And dividend payment is a there are two methods. You can either take financing activity or operating activity. We'll do that after this. Let's try to find out the profit before tax. So how do we find the to find the profit before tax, you can do a small working for retained earnings. Retained earnings column. Opening balance is given, retained earnings. $180. Closing balance is given, 260. Dividend paid is 80. Then how much is the net profit? So can you find the net profit? How much is the net profit? So what is the profit? Is it 160? Yes. Yes, profit. Net profit. Net profit is 160. And also let's find out taxation. So we need another working in order to find out taxation. Working 3. This taxation current liability. Opening 110. Closing balance. And 20. Taxation opening closing balance. I think there is one information is missing here. So I take it as if an information is not given in the question. Taxation expense. For the year is 140,000. So they have to do this. That's the tax expense. So that's the amount which was taken to the income statement of profit and loss account. It will be debited. Profit and loss 140. The difference is the cash amount. So that's the tax paid amount. How much is tax paid? Its P&L amount was not given, so I have given as a separate entry. $250 minus 100. 130 is the tax payment. Tax paid is 130. Tax paid. Dividend paid, we will take under investing financing. Financing. Even if you take dividend payment and tax payment, dividend income, interest received and all, you can take under operating activities as well. Is also fine. Okay. So I take here financing dividend pay. Okay. Now let's check the other balances. Intangible assets increase. So that's a investing activity. Investing activity. Okay. Payment to acquire intangible current asset. Intangible asset. Minus 50. Intangibles. And let's do the working capital. So under working capital, you will get inventories, receivables, and trade payables. Inventories, receivables, and trade payables. There are 3 items. So what happened to inventories? Inventories have increased. So you can see increase in inventories. Increase in inventories. How much? 150 and 100. 48. If inventory increase, cash flow decrease because it's a negative relationship. Receivables increase. Increase in receivables. 390 minus 315. 75. It is also minus. In the trade payables, it's also increase. 127 minus 190. Increase in trade payables. So that's a plus. So other than that, we are going through the statement of financial position, short-term investment and cash in hand that we have to record under cash equivalent. There is a revaluation reserve. Actually, I didn't consider that under PPE. I'll explain that once I complete this. Loan. There is a loan increase of 120. Increase in loan. 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 120. Loan increase by 120. Then cash and cash equivalent. Opening balance. Closing balance. So I'll do a separate note on that. There's cash in hand. We'll take all the balances. Cash in hand, 2 and 1. It's fine. There are some questions I'll answer. Then short-term investment. Short-term investments. It is asset 50. And there's bank overdraft. It's a minus 85 minus 98 minus. Closing net balance is minus 33. Opening balance is minus 97. So cash equivalent at the beginning is minus 97. Final answer should be minus 33. That's the note. No, no, no. Cash and cash equivalent means you have to take all the short-term cash and related amounts. So short-term investment and overdraft, you have to take as the balance, not as a finance activity or any other activity. So profit before tax. So complete up to this point. In the taxation, the profit and loss amount, it was not given. So without that, you can't calculate. So I have given separately. Taxation expense 140. I've given that. So profit before tax is, how do you calculate profit before tax? Profit before tax minus taxes is net profit. Right? So net profit is 160. Taxation is 140. What is the profit before tax? The net profit is 160. Here we calculated 160. Taxation expense for the year is 140. Then profit before tax is minus 300. Profit before tax is 300. So we will write profit before tax is 300. Right. So that's it. And one item I missed actually, it's revaluation reserve. I couldn't consider that revaluation reserve. There will be a small change. Revaluation reserve of 9,000. Right, 91 plus 9 is 100. So actually that comes here under PPE. Right, so what happens is here there will be revaluation of 9,000 and this becomes 201. Right. So purchases is not 210, it's 201. That's it. That's the difference. Huh? I couldn't consider that. You can find an answer. So we add this operating profit before changes in working capital is 398. And cash generated from operations 283. There is no interest. Final answer is 33. Right. So there are some questions and let me answer those. Where should we enter revaluation in cash flow? Revaluation is not a cash transaction. So we don't take the revaluation in the cash flow statement. It goes to the PPE account here. The cost, the PPE. Doesn't come under the cash flow statement. Revaluation. Right. This taxation, as I said, I have given the taxation amount, tax expense I have given separately. It was not given in the question. Share issue comes under financing activity. Yes. In the PPE disposal account, credit side means it's a loss. Right? Disposal account credit, profit and loss account debit. This goes to the profit and loss. Right? So income profit and loss debit means it's a loss. If this comes to the debit side, then it's a profit. Annual depreciation to the PPE account. Annual depreciation we have to take to the provision for depreciation account. It is 9. Let's do another question. Complete this. And explain another question. I'll do a complete question related to this. So this is a separate question. Right. So this is the question. MCS Limited. So I hope you are okay with the previous question. Let's do this. So this question, statement of financial position is given, statement of comprehensive income, profit and loss and comprehensive income is given, and also we have some additional information. Right. So statement of financial position, non-current assets, current assets, equity and liabilities, equity, non-current liability, current liabilities. Comprehensive income, the profit and loss, sales, cost of sales, gross profit, operating profit, profit before tax, profit for the year, total comprehensive income. Additional information, depreciation, increase in revaluation reserve is due to the revaluation of land. Office equipment, cost of 400,000 at a carrying value of 80,000, disposed for 30,000. Operating profit, sales, this information I don't think we need it. Anyway, let's prepare the cash flow statement in direct method. Put the format. For the format, and I'll give you a few minutes. I'll give 10-15 minutes for you all to try this. This is 2000. Then you need workings for PPE, interest, also income tax, finance expense. PPE, taxation, interest. Normally these workings are required, mainly the working for PPE. But I'll give you 15 minutes. Now it's 2:35. Right. Try to do this question.